Singapore is in recession. The economy has shrunk 12.6% on year in the second quarter. The contraction is the result of the COVID-19 circuit breaker, but it's still worse than economists' expectations of a 10.5% fall. Trade and Industry Minister Chan Chun Sing says the figures were expected. Brendan Tanoto tells us more.
Singapore's economy has slipped into a technical recession, its first since 2009, after it contracted 41.2% from the previous quarter. A technical recession is defined as 2 straight quarters of quarter-on-quarter contraction. Manufacturing was the only bright spot in the second quarter, posting a 2.5% on-year growth. Biomedical manufacturing injected some life into the sector, with demand for pharmaceuticals and medical equipment amid the pandemic. But it couldn't match its pace in the first quarter. However, it's a grim picture for the other sectors. Circuit breaker measures shut most retail outlets and stopped construction activities. The construction sector contracted by more than 50% on year. The services sector also had a steeper on-year decline of 13.6%. Travel curbs crippled tourism-related sectors, and weaker external demand affected outgoing goods and wholesale trade. Some economists are pessimistic on the country's unemployment figures.
Compared to the 2008 and 9 global financial crisis. Back then, it took around 4 quarters for unemployment rates to reach pre-crisis levels. But this time around, it may be a slower process, given that job search and matching will likely be slower for workers who are shifting to the growing sectors like technology, from shrinking sectors like airlines, hospitality, recreation, as well as retail. So we are looking at perhaps a labour market recovery that could take as long as 2 to 4 years to fully recover.
However, analysts stress that the nearly $100 billion worth of measures that the government is committing will cushion the impact. For instance, 100,000 job and training opportunities are being created for workers hit by the slowdown under a SG United Jobs and Skills package. Still, they warn that challenges remain.
Jobs that are lost could be permanently lost. In fact, may not be viable to continue to subsidize all those jobs. And also, jobs that are created may not necessarily be a perfect fit the skill set of those workers that have been displaced. So therefore, I think there will be a very painful transition period. It is important, to equip the workers with the relevant, those displaced workers with the relevant skill set, so that they can move on to the new position, new jobs, much easier.
On the back of the latest economic data, Trade and Industry Minister Chan Chun Sing says the pace of recovery domestically will depend on how well Singapore manages the public health situation and whether community infections can be kept low. The official forecast is for a full-year contraction of between 7% and 4%.